Yes, I just want to break down gold for you on the daily time frame and how gold has changed perspective as we see it now. So we had marked these as our all-time highs, where we want to look for trades to reach up to there, which is around 5,600. And in our last video, we'll only trade when gold begins to break certain key level. But what happens now when you see this candle here? This candle has actually changed the game for us, and we want to study the market based of this candle here. So once we have that clearly stated out, we need to understand that candle, what it has done. So this same candle here has broken this low here. Okay, this low here. Remember, we have a low here, that this low is marked, and then there's another low here. So this candle comes and breaks this low, although price is holding up. But let's study what this candle is all about. If you also see this candle here, the difference between this high and then this new low is also here. Okay, so if I'm to just combine this difference with this other high here, and I keep it like that, this will be it. And now when I extend this low all the way up to here, it will cover for that. So right now, what you need to do as a trader, you don't want to find yourself in this zone here. This is not a good place to find yourself trading. You want to see price get out of this zone, because this zone market could actually range for a while before it can either come above this. So above this area, that's where we want to look for buying opportunities when we get market structure. And then below this, when we get some good market structure, we want to look for selling opportunities. But inside this zone, you don't want to find yourself trading because the market is going to be ranging a lot. So once we have this base of the daily, meaning if we break below this, we could actually first head to this low here. And then if it is broken, maybe we could come back to this other low. But for this case, if we break above this, then we could actually head back to these other highs here. And if we break these highs, we could head up to all-time highs. But then in the middle here, you don't want to trade because it is going to be a range. So once you have this, let's study how the market is actually aligning up in this range, and we see which opportunity is going to present itself, whether it's going to break to the downside or to the upside. Remember, there's a lot of geopolitical tensions happening, and the best predictor for the geopolitical event that is going to push the market further in any direction is usually the technicals. The technicals will give you an early indication. So once you have this, let's now come to a lower time frame. In that case, I would come to the 4-hourly. So what do you see on the 4-hourly? This is the range we talked about. We don't want to find ourselves trading in this range. So if you see this, there is also a price difference. There's a difference between this high and then this lower low. Because why do we call this a lower low? Because we've broken these lows here. Okay, so these were a lower low, a lows, and then we formed a lower low here. And the reason for that is because of this demand area here. Okay. Now, explain this concept last time. When you have a series of one-sided candles and opposite candles, when the market reverses, comes back into that area, that will be a reaction. So with that being said, let's study price here in this range here. But like I was telling you, there's a difference between these highs and then this new low low, which is also here. So that means I have to cover the whole of that like that. So here, this is a zone whereby you only want to look for buys when the market breaks above here. Okay. You don't want to buy when the market is actually inside here. You don't want to also sell when the market is inside here. You want to sell below this, and you want to look for buys above this after structure. So with that being said, let's just switch to the 1-hourly and we try to understand how gold is actually playing out in this range here. So if you look at this in this range, of course, there's a supply area here. And because of this supply area here, you're seeing market failing to break above these other highs here, meaning the market is actually being resisted from going further into this price difference area. So once you have this, we can also mark our lows here. You have these other lows here. So now what is happening here is that within this range, the market is also ranging. So you don't want to trade until the market gets out of its own range, which is this one here. So once we break this, if we can manage to break below this and then do that, we can look for those sells, capture and bring us to these other lows here. And then if this is broken, then we can target for this. And then also once we break here and then we form a very good structure where we continue to break the highs, we can target this. And then once we break here, where we can form other targets, we can target these other all-time highs. So right now, the best situation to do with gold is you don't want to jump into trades. You just want to wait for the market to get out of this range. Let it get out of this range and study price. If it is going to get out of this range, is it getting out of this range while failing to break highs? Meaning failing to form higher highs and then breaking the lows. So if it continues to fail to break highs and then break these lows, that means we could head for bearish. Or if we all of a sudden break this high, because right now the fact we've broken this high, just let me make this very clear. The first high we've broken is here. Okay? We've broken this high, and then the market fails to break this other high, comes back down. So now we are ranging here. So you don't want to really find yourself trading here. Just wait. Today is Thursday. By end of it or Friday, the market would have actually given you a clear direction. So let's see what happens.